Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for June the 28th to July the 2nd, 2021. Hope you had a good trading week, and thank you once again for tuning in to another week of market watch. So this past week the markets basically found their footing and started the drift back higher again. So we ended the week with the Qs and the SPYs at or near all-time highs. And this means that we saw the dislocations we saw last week and a couple weeks ago when the markets began to pull back a bit was a temporary phenomenon. And as I mentioned last week, we really had a market that was sort of extended to the downside, and the buyers once again stepped up when they needed to, basically defending these important levels, and once again putting a bunch of pie in the face of the short sellers and the bears. So what can we expect this coming week? Well, this coming week is the final trading week of the month and of the quarter, so that is significant, and because we will see a peak at the brand new month and the brand new quarter on the first of the month, which is Thursday. However, next week, of course, is July. Well, we have July 4th next week, so that is it's going to be a shortened holiday trading week next week because of the U.S. Independence Day. And so typically going into July the 4th, we usually see lower trading volumes and less volatility. We've already seen that a lot over the past month or so. I've already, for the past few weeks, I've already said that it's starting to feel like summer trading already, even though summer hadn't started yet. But certainly now, we're getting right into the U.S. Independence Day holiday, so we can probably expect that by midweek a lot of traders will again square away their positions, begin to reduce their exposure, and we'll see volume definitely decrease as we go closer towards the end of the week. So let's jump to the charts now. We'll take a look and see where we've come from, and then perhaps where we go from here. And the first thing I want to point off here is this chart, and I think a lot of commentators have been pointing this out, and rightfully so. This is one that one chart that I often bring up here on the videos, and it's one that I keep a close eye on. And this chart basically shows the SPY, and the blue line which is overlaid on top of it, is the number of S&P 100 stocks currently above their 50-day moving average. So right now, we just saw the SPY on Friday hit all-time highs and close near all-time highs. And if you look at the blue line, this shows how many of those S&P 100 stocks are actually above the 50-day. And right now, the number is only around, let's say 59%. So 59 out of 100 of those stocks is above the 50-day. And you can clearly see now that we have a real divergence between breadth and the index. So you're making fresh highs with a lot less underlying breadth. And this is a bit concerning. It doesn't mean it's time yet to go out and short it, but this is certainly a situation now that puts a larger reversal in play when we see the price action set up. So this is something that's worth watching now. So unless in the near term we see a big run up and broad participation, this is definitely a negative. This will definitely play into a deeper, more corrective pullback if this continues. So if we continue to see this move to the upside on the SPY, and we see this negative divergence continue, when we get a good chance at doing a reversal, that reversal will be steep, and that will punish a lot of folks now who are buying this run up. So let's jump into our regular charts now, and let's see where we go from here. So the VIX, is it giving us any fear right now? Is there any indication we need to start to hedge or get worried about things? Not yet. So more than likely for the rest of this month, we're going to close in this condition. That is Momo down in the month. Again, earlier in the month, around that Fed meeting we had last week, there's a bit of fear and it popped back into the prior month's range. But you can clearly see now it's Momo down in the month, and it's going further down. So as we said many times already, this thing is going back into it's trading now back in the range of pre-pandemic levels, and there's no reason to believe that we won't see even less volatility. So weekly condition. Again, it's a down week, right? So we had a bump up last week because of FOMC. That was just a blip, right? That's just a blip. See, it's always funny when people get scared out of their positions when they see this sort of action. But we know that the VIX is in a downtrend. It's actually in a very, very strong downtrend. So that's a 12% blip to the upside. That gets erased this week, right? So that's now a reversal of that prior week's condition, minus 16% week. And as we redraw our lines here, what I'm always looking for is for some sort of reversal that will create the condition for a larger reversal. Yes, that week there was a reversal of the weekly, but there's no chance of us reversing, with very little chance of us reversing that monthly bar, right? So you have big run-ups in VIX when you actually have the ability to take out a prior month's high, and that's very unusual, and that's when you have to really get ready. And then, as I said many times before, I'm not going to belabor the point, you really want to be paying attention to the VIX when you can break above these average monthly ranges. So this is the weekly chart here. When you can break above the blue bands on the upper end there, that's when you're trading above the average monthly range. That's when you see a range expansion, and that's when the VIX can really move, and that's when you have to really be careful if you're long equities. But for now, we're trading right in the range, and that's basically means it's a continuation of the current regime. So we have a reversal of the downside in the VIX, and now the VXX chart is it's at its all-time lows. And again, this is not a good accurate depiction of anything, because as we know, VXX has that built-in decay. But it's always it's a very tradable product, so that's why I like bringing it up here, and it's a real nice counterpoint to when you're looking at the SPY. So just to show you how this thing's playing out here now, the 2-day chart, I think I brought it up last week. If not, this is why I always look at the 2-day chart. It's pretty obvious. You have the outside bar, and that scared a bunch of people, right? This outside bar scares everyone. Last week, you look at that alone, that might be a scary condition. But then as soon as this happens, you go inside week, then you're looking to see which way it breaks, and it breaks to the downside, and we have 2 consecutive 2-day bars to the downside, so that's 4 days of selling to the downside. So on the daily chart, what do you get? It's just a steady bleed. We open lower, all right, on Monday, and just basically 1, 2, 3, 4, 5 consecutive lower lows, although on Friday you did get a higher high just to close lower. So it is an outside bar, but it's very tight stuff, right? You can see how tight that is. It is a very low volatility environment, which again is when you don't have a lot of volatility, as you see the VXX, that's usually positive for equities. You do not want a short or dull market, and this is a dull market, and this means price typically drifts higher. Now, to get a better look at things, I like looking at the VX futures contract, because that is, doesn't suffer the decay that you see with the VX XETN. So the VX futures contract went month down, so you had a month down bar here. So currently, it's a reversal to the downside, shooting star, and then a month to the downside. And what I want to show here is the following. So we have a Momo up, right, on the weekly chart, and all we got to take now is this coming week, and I expect the volatility to continue to diminish here. So once we take out this past week's lows, it's a Momo up reversal short, and you're gonna go after that week's lows right there, the outside bar. More than likely, if we break below this week's lows, we go after that pivot very quickly. And if we zoom back out again to take to put things into perspective, where are we in terms of the VX? In terms of prior ranges, well, look, we're right back trading at the 1765 handle, and this puts us, again, right back into this era here, pre-pandemic. So back in the February, of 2020 range. Okay, so this is my belief, is that even if there's a lot of talk right now, a lot of potential for a variant of COVID to be making its way around the world. Even if that becomes a serious situation, I just don't think that the markets are going to react the same way as we did back in March of 2020, or late February of 2020, March of 2020. The reason being, the market's forward-looking, and I think what the market's really looking at in terms of COVID now is not that there's a potential for another variant, but that it's watching the rate of change. And I think that's the most important thing. Like we've seen with the bond markets in the past several months and the US dollar, it's not the absolute moves that matter, it's more of the rate of change. So if we see a rate of change in terms of the COVID numbers spike, that's when the markets get spooked. Same thing when we saw the bonds begin to the bond yields begin to increase. It was the rate of change that was happening, right? Likewise with the dollar moves, it was the rate of change, and that's what spooks markets. So it's not so much I think we have to deal with the variant. I think it's now about the rate of change, and I don't think the rate of change is going to be that high in terms of the variant, and that's the bet that I'm making there, which is why I don't think the VIX is going to spike back up to the 80 level again that we had back in March. Okay, so there's your VIX. Final chart here on the VIX. Here, see what happened on Monday? So here, this is the Monday right there. It goes Momo up on Monday, hits the Bollinger Band high. It's a Bollinger Band that's actually declining. Tags that, sinks back in again, and then on Tuesday, right, it breaks below the prior bar's range low. So it's a Momo up reversal short, and we have 4 consecutive down days. So basically people just fading that market now, and we're pulling back in again. We're back at that 1770 handle. So you just need to go a little bit further down here, take out 1765, and that'll create the Momo up reversal short on the weekly chart, which we talked about already. And then more than likely we come out the other end and take out the prior week's lows. All right, so there's your VIX contract. All right, let's move on to the SPY now. So what's the SPY telling us? Well, the SPY is telling us it wants to go higher, and I think this is the path of least resistance, especially going to the summer season. I think you once you start seeing the summer season play out, historically it tends to be one that drifts higher. Like as I said already, you don't want to short a dull market. This is a dull market, and it looks like the markets want to go higher. There's nothing stopping it right now. So basically, we have count them. 8 consecutive months of higher highs now. 1, 2, 3, 4, 5, 6, 7, 8. Right, so that's a Momo hammer the prior month, and anything you're seeing intra-week is just basically intra-week, intraday noise. The path of least resistance continues to be higher, frustrates everyone who wants to try to get short. Again, strong month so far for the SPY, and we go Momo up now on the weekly chart. So Momo up. We're still far from the Bollinger Band, so we can, we got the all-time high there, took out all the prior highs, and if we redraw our ranges. Now, because we know what Momo up means, we want to see simply how far does momentum take us, right? Now, in order to extinguish this momentum pattern that we have here, you got to take out the prior week's lows. If that gets taken out, that would be something to watch for. But with only 1 trading week left for the quarter. For the 3 trading days left in the month, and a shortened calendar, shortened sort of a slow week coming up, likely due to the trading week next week because it's shortened because of the holidays. Probably just drift, right? It's gonna be drift, and we have full time frame alignment now. No need to try to get cute and try to short that move to the upside. So Momo up on the SPY, and we had 5 consecutive days of higher highs, right? So 1, 2, 3, 4, 5. Small red day on Wednesday there, but all higher highs and higher lows. Buyers back in full control, and once you broke above the monthly open there, right there, that's full time from alignment with the upside. Here, as I said last week, and I'll show you that in the Dow chart. But look, 50-day moving average came in play right there, right? So 50 days, the purple line, and the lower Bollinger Band. So as I said last week, and I've been saying the last little while now, you don't want to be shorting or buying when things get extended. Like I said that last week, you're getting extended into the lower ends of the range, and if you buy or sell, if you sell the lower end of the range or you buy the upper end of the range, that's poor trade location, right? So and more than likely, and the markets have not been rewarding folks who are chasing. So shorting down here was a really, really bad idea, and you got some pie in the face right away on Monday, right? So right away, if you shorted on Friday thinking, yes, we're gonna get continuation, you got to cover on Monday, because if you don't, you have 4 more days going against you, and that's a very, very, that's basically called a squeeze, right? So they squeeze the shorts. So there's your SPY chart. What I expect is more the same, right? So we're going Momo up now on the weekly chart. Let's see how far things can go. But because you're going Momo up, it's bad trade location if you buy it here, right? So if you're seeing here, okay, I'm buying a breakout because we're at all-time highs. Do not be surprised if it goes a little bit higher and all of a sudden pulls back in again and stop out anyone who bought on Thursday, Friday, right? Just because we go higher doesn't mean we go higher in one straight line. We could have, some moves to the downside which fake out and scare out late longs just to have, people buy the dip again and for it to go higher. And that's been the modus operandi here. Is you don't want to be chasing things when things are getting extended. You want to be buying the dips here as you see the buyers of dips. Look at the 50-day. How successful has that been? You got people stepping up every single time defending. Look, they bought the dip there, again, here, right, back in March. Look, here in March, it broke below for 1 day. They reclaimed it right there, and you can see the 50 period has been a very, very good level of support now for the SPY. It's only way back here. We have a couple occasions here back of last October where it broke below but did not stable for very long. Once you hit that Bollinger Band lows, bam, they bought it back up again. But clearly now, the buyers are in full control, and the 50-day moving average continues to be a great place to be a buyer. So let's go on to the Qs now, and the Qs, once again, to the Q holders, all-time highs. So as you pointed out last week, we had a strengthening TLT, so long bond, and so that means being long duration has been a good trade. And when you're long duration, that means the high tech names tend to be working. So Qs, we had a big Momo hammer last month, and I talked about that already at the beginning of the month. This is a continuation move now into all-time highs. Congrats Qs, all-time highs. And the weekly chart. Look, 1, 2, 3, 4. So 1, 2, 3, 4, 5. 5 weeks of higher highs, higher lows, all stemming from this move right there. Inside bar up. This move here, that's when they reclaimed this is the beginning of the month. Look, right there at the beginning of the month, they had a chance, right? The sellers had a chance to actually break the month and turn it red, but immediately the buyers stopped out the sellers, and since then, and we only have about 3 days left in the month, we're more than likely going to end as a green month, right? So there it is for the Qs. Nothing else much to say about that other than here, this is the Monday. So inside bar. Remember last week I said, okay, watch how this inside bar resolves on Monday, because you get an inside bar, right? So people, if you're not looking at the time frames, you don't see the bigger trend. If people shorted that bar, they made money for like maybe 10 seconds, right? So on Monday here, it broke below the prior day's low. But immediately the buyers stepped up, right? And once they turned the day green again, and the month and the week green again, a break above this bar's high, Monday's high, is an inside bar reversal. And immediately they do that on Tuesday, and it takes it to all-time highs, and they gun them for a few more days, right? So there's your inside bar reversal day, a Wednesday. So really nice day. Sorry, it's Tuesday. Really nice day for all-time highs. And then Wednesday, Thursday, and a bit of pullback on Friday because the bonds have gotten weaker on Friday. So yeah, what else can you ask for? That's you're getting right into all-time highs, and this means things like ARKK has been working really well as well. As I've been long this. I finally took some profits on Friday and closed out my ARK trade. It can move higher here, but I'm gonna close it out here now, and I'll count that as being a good trade. So ARK, look, I think it has a little more room to play. Inside bar down, and now we did inside bar reversal to the upside. We possibly take out April's highs right there now for ARKK. I'm taking it off simply because we're going to at the end of the month. We're at the upper end of this Bollinger Band. Again, you can certainly go higher here, but I like to take it off once we broke below that bar's low. When this thing happened like that, it took below prior bar's low. That takes out the momentum of this move. But certainly you could pull back in here now and goose higher. I just don't want to be involved in that trade because I took out the easy portion of that trade, which is I got long down here, got added in the in this area here when it did the reversal, and so now I'm flat ARK, but I can definitely see that thing heading higher. So congrats Qs, congrats ARKK holders. That's been a really nice run, and it was kind of opposite of what a lot of people were expecting because everyone had been long those reflation names, right? And inflation names like cyclical names like commodities and so forth, and all of a sudden ARK bottoms, right? ARK bottoms here in late May. Mid-May, excuse me, and then it's been on a tear for the past, how many weeks now? 1, 2, 3, 4, 5 weeks. So a really good move there on ARKK. So let's go to Dow now, and Dow, look at this move. So Dow is fixing its chart big time. So at one point during the month, right, it had broken below the prior month's level. So it looked like it was going to do a reversal here because everyone had basically counted out the Dow and saying, yeah, that's it for the Dow. That's it for that reflation trade. But look, the buyers bought it right back up. Now we still have 3 days left. This could change back again and come back down here again. But that's looking pretty healthy if it closes the month like that, because that is basically a big hammer there at this point. So still trading with a green quarter, even though the month is still red. But we do get the inside bar reversal on the weekly chart, right? So inside bar down. This week we broke above the prior week's range, so that makes it an inside bar reversal. The only issue being is that we have a red month, as I alluded to already. So even if you break above this week's range, it's going to be a little bit tough because you have this level right there, which will probably act as resistance. So this coming week, we have 3 days left in the month. So, you know, the month will probably stay red. I think on Monday, Tuesday, Wednesday, maybe inch up to here. And then on Thursday, Friday, you get that new month. So this orange line will open up somewhere around, you know, wherever it opens up around here, right? And then we can see, let's see if this thing on Thursday, Friday can turn the month, can start off the month green. We get the first and 2nd of July. All right, so let's watch the Dow for that possible condition to play itself out. Okay, but for now, you know, Dow had a really nice daily move. That's, you know, basically five good days in a row. You know, this Wednesday was basically a red day, but that's an inside day, right? So that is very strong because that just means we're getting consolidation. So, and then get a breakout, you know, a breakout prior the breakout on Thursday, Friday above this prior bar's high. Okay, so that's an inside bar break to the upside. It's a gap up, right? So anyone who shorts this day gets squeezed and squeezed even more. So here, remember last week I said this is very extended on the Dow side, right? Look at that move. I think I counted last week. It was 8. I think it was 6 days. 1, 2, 3, 4, 5. Yeah, 6 consecutive days of lower lows and lower highs. That's extended. Okay, so this is what I was saying last week. If you're shorting down here, that's really extended. You're like the last. You're the seller of last resort at this point. There's no more. You know, you're definitely not as early as the guys who are shorting up in here. And now you have to watch out because, as I mentioned already, you're going into Bollinger Band lows, and any kind of pop up will force these folks to cover. So this happens right away on Monday. Look, they gap up on Monday. So if you short down here on Friday thinking, I think it's going to break down, right? You're underwater right away. That's right. So you're really underwater here now, and they squeeze you for 5 consecutive days. Now imagine you're short down here and you see this bar. You're praying at this point, right? Like if you haven't covered your shorts yet, that this thing breaks to the downside and that maybe you get to get out without taking a maximum loss or, you know, a really painful loss. They don't give you that choice. They actually break up higher on Thursday, Friday and really squeeze the guys who got short down here. If these folks down here did not short yet, then their positions are deeply underwater at this point. So we do have this mixed time frame alignment now. Green quarter or red month, and this is, as I said already, this is going to make this kind of trading happen where you probably, you know, maybe you break up here, but you're going to have the monthly condition acting as resistance until you get the new month here on Thursday. So this will be interesting because right here, this is where the monthly bar resets, and we're going to get a chance to see where the monthly open is, and that's when you want to watch and see how price transacts in relation to that monthly open. So that's what you need to watch for on Thursday, Friday is, you know, how is price reacting to the new monthly open, and in what relation are we trading with regards to that. Okay, so let's go to Russell now. Speed things up a little bit. Russell did the inside bar reversal, probably going to go to all-time highs on monthly chart. Look, inside bar down. Look, big bullish hammer. We've been calling it for a while. It broke above the prior month's range, and that's going to take out that high. And all you got to do is take out that high there. So more than likely, more drift higher. Now, I think everything looks pretty rosy right now, but I'm going to give you a chart in about 3 charts here. That's gonna be once again that chart to watch for to tell us whether or not this bullish bias is warranted or not. So for now, though, yeah, all things are firing on, or everything's firing on full cylinders, on all cylinders. For equities, 5 consecutive higher highs, higher lows. For the Russell, again, all-time highs more than likely on the Russell. So don't be short this market because you just had 5 consecutive green. Well, you know, we can get a pullback here, so I'm saying don't short it, but definitely the trend is higher here now, and you do have, you know, the U.S. Independence Day holiday coming around the weekend. So if things begin to get dull, once again, I'm repeating it, do not short a dull market. So TSX, gangbusters to the upside. I don't think we hit all-time highs this past week. No, we did not. But we did hit all-time highs earlier in the month, and this is now doing the Bollinger Band walk. So as I've been saying, I'm very wary of this market now. Not because I don't think there's further gains possible, but because now this is when you got to turn on the yellow light, as in possible yellow flags, because you're doing the Bollinger Band walk here now, and as we get into the new month, that's when you want to watch out for a possible reversal, right? Because this is not a large bar. This bar here for the month of June, you're up 2.5%. So we'll talk about this next week. But you know, when we draw these ranges, I'm gonna put my low right there. I'll be watching to see if the TSX breaks below June's lows. Okay, so next month, when we start trading wherever we are, if we take out June's lows, that'll be a very bearish condition, because you're going to have some folks who are going to likely get caught off sides as we're doing the Bollinger Band walk to the upside. And as we've seen in some charts, well, I'll show you later, that when you break that Bollinger Band walk to the upside, especially on a higher time frame chart like this, you can definitely get a sharp reversal, and that'll stop out some people. So for now, TSX, be alert. I'm not calling for shorts yet, but you have to be aware that you're going into Bollinger Band highs now, and next month. So I'm not thinking it's going to be a pullback this month, even though you may or may not close at the all-time highs. But next month, that's when you're going to look for that reversal condition, and that might offer a good shorting opportunity there for TSX or commodity names. So TSX, quite weak, inside weak. Which way does it break? We'll wait and see, but I'm biased to the upside, so even if it breaks to the downside, you're looking to be a buyer at some point until this thing pops higher again. So inside week, let's see how that thing breaks. Path of least resistance continues to be higher. Okay, emerging markets, EM. EM repaired its chart a bit, so now we're back. We're back above last month's highs. So this is it's still a red month though, but it's really a do nothing. You're kind of stuck on a range here. Like if you look at the 3-month chart at this quarter. 4 days left in the quarter, and why does it look like it's so choppy? It's because you got it inside quarter, right? So you're basically stuck inside of Q1's range. So Q1, Q2, 4 days left in the quarter, more than likely, right? You end it like this, and then the question is, and we'll talk about this, we'll revisit this next week, is on what side of this bar does price break, and that will be significant. Okay, so we get an inside bar now on the 3-month chart, sitting at the upper end of this broad information trend line. So that'll be significant to watch on what side of this bar price ends up breaking eventually. I don't think it's going to happen this quarter with only 4 days left, but we shall see next quarter, and we'll revisit that next week. So for now, red month probably ends the month red, more than likely, because once you have a high open and you fade back in, well, there's the outside bar now. So you do have an outside bar, but you do have mixed time frame alignment. So red month, green quarter, and you're probably going to end up somewhere like this until you get a new month and a new quarter settle itself out. Okay, so there's your EM. Let's talk about bonds now. So the bond picture is the one that's getting a little bit tricky here, because you have a mixed, the bonds and the dollar picture I think is what's worth watching. So here, right, we had the inside bar reversal on the monthly chart on TLT, and as I mentioned already, like this is what I was calling for the inside quarter, way back now. I think last month I was saying, yeah, it's gonna be very, very different. Well, actually all quarter long I've been saying it's gonna be very, very difficult for TLT to get outside of the prior quarter's range, because Q1's range was huge, right? So this is very abnormal for bonds, especially when it's going to the downside, and it's the rate of change that everyone's watching, right? So this happened very quickly for bonds, and so that was alarming to a lot of participants, and that's what caused the dislocations we saw back in Q1. Now we have the inside quarter, and we're going to more than likely end that way with 4 trading days left for that inside quarter. So on the monthly chart, we got this inside bar reversal to the upside, but now we're kind of in no man's land, right? So more than likely we just kind of stay in this whatever pattern we're in now, because this past week it did a lot of nothing. Okay, so after the Fed announcement last week, and people got a bit scared of the taper, of potential taper in 2023. That's how far away they're signaling it right now. I think people are still digesting that, and so right now the question is, do bonds head higher? And if they do, the TLT, the long bond, that will definitely be productive for the tech growth complex. That will be good. So this week here we have a very clear pattern now. On what side of this range does price break? Right, we got the inside week. Do you break to the upside or break to the downside? That's going to be worth watching. A break to the upside, that means it's going to be it's going to be a pile into tech, and I think it's going to be very, very good for the FANG names. You break below here, you got to watch out. These people might see some profit taking there, and they may take some off those growth names. So watching that range very carefully now. TLT is giving us a very, very good look on what we need to be watching. So there's your TLT chart, and what do we have here on the 2-day? So yes, so here we go, double inside bar down. So this kind of looks bearish, but if you don't look at the price pattern, it looks sort of bearish because it went double inside bar and down. But what we know is that we have it's a green quarter and a green month. So it's a green quarter, green month, And so if you break above this bar's high, that one there, then it's going to be inside bar reversal to the upside, right? And you're going to have a green week, green month, and green quarter. And so then potentially we can take out that prior week's high, and that turns into an inside inside brick to the upside. That's what it would look like for that scenario to play out. Take out this bar's high, then we come out through here and take out that bar's high, and that creates the inside bar up on the weekly chart. So let's see if that scenario plays out. Let's go to the US 10-year, because that one there took a bit of a break, but also basically you can say it's kind of stuck in a range. So on the monthly chart, we do have 2 consecutive lower lows now, right? So inside month, down, down. But here's when, as I said about the TLT, you're stuck inside quarter. So more than likely, the bar just stays in this range, right? So I don't think we're going to get a lower low here. We're probably going to get stuck in this. So that's just, what it'll probably look like by the end of the month, that kind of bar. Now on the weekly chart, we had the inside break to the downside, but the buyers quickly picked it up. So you see the lower band there? That's the average monthly range. It broke below shortly, for a quick moment, but the buyers quick step back up again to put it right back inside that average monthly range. So now we're in this condition where you break above there, and potentially you do an inside bar reversal along to the upside to take out that prior bar's high. Issue here is that you have a red quarter and a red month. So if it does break up here, I would not be surprised to see sellers step up and fade that, or maybe we just come back down here and fade for the rest of the month, or get stuck in this range. We have full time frame alignment to the downside now for the 10-year. So the yields are sinking back down again. We've been watching this potential, 2% level, 1.9% level up here as a possible target. But that, as I said, it's not going to happen this quarter because of this inside bar issue. Next quarter, right, there's a chance that somehow if price can come back up again and take out that bar's high, then that comes into play. But again, that's going to have to be at least a week out before that even comes into play, because we're still stuck in this range and we're still very, very far from taking out that prior quarter's or this quarter's high when we get into the fresh quarter. Okay, so but that's the bigger picture, and one we'll be revisiting throughout the coming weeks. So just grinding higher now on the equity side. The US 10-year, it is grounding higher on the daily chart, but once again you do have that full time frame alignment of the downside. Well, not full time frame alignment. We do have the green week, but we did have a red quarter and a red month. So expect sellers to step up here now with to close out the month. Let's go dollar now. So this is the one that I've been watching carefully, right? And the dollar basically just took a break this week, and so this is going to be once again the asset class, in my opinion, to watch to see which way the markets break. The dollar has been, I think, the best compass for the past little while, especially as it pertains to the commodity complex. And if we see a strengthening dollar, you can definitely expect a weakening equities market. So dollar right now stuck in a range on the quarterly chart. Looks a lot like the TLT in the US 10-year, right? So well, the opposite of the US 10-year. Inside quarter, we're probably going to end up this quarter inside quarter. All right, so we had a break above the prior month's high. We have a red quarter there. So right now you have a green month, green quarter. That means more than likely we just stay in here for the rest of the month. Now, this is what I'm watching for. We have this very, very clear inside week now, because we took a bit of a break last week, and I said it would not be surprising to see that we have a very extended equities market to the downside, and that there might be some people who are going to get caught offside if they cover their shorts, if folks are forced to cover their shorts. So the Dow, the DXY, we had a good 2 weeks here, a good again, it's Momo up still. All right, so these 2 weeks were nice and green, but it's still part of a Momo up condition. See, so Momo up, inside bar, up again, inside bar. So if we break above this past week's highs, that will be significant, and that's worth watching, especially if it happens near Thursday or Friday, because by then this quarter will be down here somewhere, right? We'll have the brand new quarter, and then you have to watch out and see on what side of price. What side of the open does price transact, right? So if we go inside weekend up and you have full time frame alignment, then watch out. That will be significant. That'll be something very worth considering. And so for me, this is going to be the market, the asset class to be watching to give us an indication that the markets may be turning over. So watch that DXY very, very carefully. I'll just say that one final time. Okay, so gold now obviously trades in direct opposite with DXY. So gold did create a lower low on the month. So we have the outside bar on gold now. And the dollar is really going to play into what happens with gold here. If the dollar breaks to the upside next month, so in July, then I think we're going to see a Momo down condition on gold here, right? So you already got the outside bar in July. So on Thursday, Friday, if it breaks below this month's lows, so on Thursday, whatever the lows are, on Thursday, if we break below the month's lows, that'll be Momo down on the month, right, to begin the month. And we'll also have a new quarter, so you got to see how that relates to the new quarter as well. Okay, and right now, direct opposite, right, of the dollar contract, the DXY index, so, right, outside, inside, and down, inside bar. So you break below this past week's lows, yes, we're going to sink lower in gold. Gold's definitely going to trade lower here. Or if you do the opposite, so if the dollar breaks down, this will be very positive for gold, because then you're going to go inside bar up possibly, and then maybe gold comes back up again. That's going to, that's going to be, it's going to take some time for gold to fix its chart, because this is an outside bar in the month, right? So let's say, in the new month, you open up here, that'll be inside bar, right? Because you're stuck inside the prior month's range. So given how wide this range is, it's going to be tough for it to go outside bar and up, because you have to reclaim that range. More than likely, the more likely scenarios are you go outside bar, inside bar, or outside bar and down, because you're close to taking out that bar's lows already. But if you do an outside bar, inside bar, that'll be just like what we had back here in December. And then you got to wait and see how the next inside bar breaks. All right. But for now, this is, it's a very tight week for gold with only a 0.5% gain for the week. So now let's watch and see how this range breaks. So that's what I'm waiting for gold now to signal there's a break lower, or we get some sort of reversal and gold begins to try to repair its charts for a move next quarter sometime. Okay, now let's wrap things up by talking about the crypto space and the crypto markets trading full time frame alignment to the downside. So my bet had been that we were going to stay inside month on Bitcoin, but nope, that low did not hold. So that was that low that we saw created earlier in the month did not hold, and we got a fresh lower low now. So this point here now is looking very, very red for cryptos, and I think it's going to take a while now for this chart to repair itself. So it was more positive, even though it wasn't a good thing for Bitcoin to have to have a red month, but it had at least been in this week an inside month. So the best case scenario was that for bulls was that it was going to stay inside month, and that maybe in July we'd have an inside month break to the upside. That scenario is now out the window. It's now you have 2 consecutive red months in a row, lower lows, lower highs, right? So trend clearly to the downside now. The only question now is it's hard to get short because the price is extended. Ideally, my bias is to the short side. I'd like to short these markets, but it's really, really hard to stay short. And I was short last week, if you recall, but it's really hard to stay short these markets because any news that comes out tends to cause some short covering rallies, and it's hard to stay short when you have 15-20% rallies going against you. And that's just the nature of bear markets. If you haven't traded crypto bear markets before, they are not the easiest bear markets to trade because there still are buyers out there, and it becomes very hard to hold those shorts unless you're willing to sit short and withstand a 20% rally against your positions. And you can if you have a really good trade location, but again, it's up to you to decide if that's the style you want to trade or not. So 2 monthly lows now, and this is what we're watching, right? So we have, as I said already, about 4 days left in the quarter for Bitcoin. Now the big reversal would be if we take out Q1's lows. With 4 days left, can we take out Jan's or Q1's lows right there, right? That 28.540 area is that last line in the sand this quarter, right? So if you take out that is a reversal. And that we expect even more lower prices. For now, we still have a up month, not in terms of the returns, but he had a higher high and still a higher low. So as bad as that seems, as red as that is, it's actually still a higher high and higher low, right? So this coming week here, we get that fresh month, we get that fresh quarter. The question is, do you break below the prior quarter's lows or not? That's what you want to watch for. So on the weekly chart, it looks like so. We had a potential inside bar reversal that ended up failing. So that low, I went double inside bar and up, right? Now that got extinguished, not extinguished, but it got broken when that low got taken out. And we took that out. So we took that out. We took out May's lows as well. So the low there was 29,563. But buyers continue to show up in that 30K area. Right now we're trading at what? 31,678. So buyers keep stepping up to defend that 30K area. So the question is, can you break below that and then challenge that 28,540 area? That would flip that, that would create the reversal on the quarterly chart, and then maybe you sink back in even lower. Yeah, so that's what I'd be watching for here. So that is the condition now. And as I said before, right, this is the issue when you have, this is why, the TSX is not anywhere near as parabolic as this chart, but that's the issue, is when you do the Bollinger Band walk to the upside, right? And I'm using the monthly chart here. And this is what I've been warning with the TSX. Once you start doing the Bollinger Band walk on the monthly chart, if you break below the prior month's range, someone's going to get stopped out, because you're going to have folks who are coming in late, and when you do see that price reversal, it's going to be corrective. So look, so there's your month of April, and we broke below that month's low right here in May, right? And now we see a pretty good reversal, and that was the to the tune of 35%, and that's down another 15%. So just go back in history, right, and look at look at your charts on the monthly range, monthly time frame, and when you see that Bollinger Band walk to the upside, it just has to keep going, because if you don't, it lures in a lot of late longs, and once that low finally breaks, yeah, you get some steep reversals, and most folks will not be able to withstand that kind of pullback, right? So that's what I'm wary of right now for the TSX, because that's what it looks like on the monthly chart. All right, so Bitcoin did its reversal already, pulling back now, and yeah, it's full time frame alignment to the downside on Bitcoin. I would not be looking for longs here. The issue is that it's not easy being short either. So for me personally, I'm going to probably just continue to trade it intraday, the crypto markets intraday, and look for swings when we have the brand new month, brand new quarter. Momo down on the daily chart, but once again, look, you guys low as 31,607, this 30K area right around here. All right, where's 30K? Yeah, around there. We had a brief blip here, and I took a fantastic long, by the way. I'm not gonna brag too much about it, but I took some fantastic longs here on, I think it was the Tuesday, right, when things broke down here on Tuesday. Sorry, this is Monday, the 22nd. Correct, yeah. So the 22nd was Tuesday, excuse me. And was able to catch a bottom here in Bitcoin and rode it all the way up into this area in here. So that was down. Let me see if I can pull up that chart, because it was a fantastic trade on Bitcoin. So let's pull it up here. So let's pull up the day, and that was the 22nd. Let's jump to the 5-minute chart. And everyone got overly bearish on the Tuesday, and that marked the exact bottom on that for the week there. So we can find that low right here. So right here, we zoom in. So there we go. So we broke below the prior month's low, and so this is where people started to panic here, because we broke below the prior month's low, and this is what I bought right there. So really caught that bottom within the 5 minutes of it happening. And fantastic trade on BTC. Picked up BTC, picked up Dogecoin and SHIBcoin, all around that same time frame, using the same, using basically the same setup, but outside, inside, and down reversal, and that thing just ran. I don't know. Yeah, probably the best trade of the month for me there on BTC, Doge, and SHIB. So beautiful trade there on that, and just basically playing the fade because everyone got overly bearish. So there's your BTC. That's an example of BTC trade. Let's jump on to ETH now. ETH, nowhere as nice as, continues to be weak, and finally broke below the 200-day. So ETH, just like the BTC chart, broke its Bollinger Band walk to the upside, and now it's gone Momo down in the month. So that is, again, not a good picture. Momo down in the month for ETH. The only thing with holding it up so far is that it's still green. It's still in a quarterly uptrend, just because it went nuts last quarter, but now this quarter, look at the size of that shooting star. That is I don't think I've ever seen a bar chart like that before. That is phenomenal. It is very, very unusual. I've never seen a shooting star that wide before. That is amazing. So this coming quarter, watch out. If you break below that low there, this past quarter's low, watch out. You're gonna have a steeper reversal, and then that puts in this this low in play, way back to 714.89. So yeah, that is something else to look at there. Phenomenal. So back to the ETH chart. Momo down now, full time frame to the downside. We have the double inside bar break to the downside, 3 red weeks in a row. So there's no, this week here we'll it broke below the prior month's low. So yeah, just heading lower. Full time frame line at the downside. Finally, they gave up the 200-day moving average. 200-day moving average is right there. It broke below it on Monday. Small bounce Tuesday, Wednesday, Thursday. Inside bar break to the downside on Friday, Saturday. Now, issues that you're going right in the lows. Very tricky place to get short, right at the prior month's lows right there as well. And buyers seem to be stepping up. Again, not the easiest location to be shorting at this point, and I would not be looking for longs either, unless it's really intraday for some short-term trades, because you're very extended, and you're definitely not the first one shorting here at this point. It gets very, very tricky. So my preference is for swings, anyways, is to wait for the final week to play out, to get the new month and new quarter before looking for new swings. Hopefully, the best case scenario is that, well, for a trade anyways, you pop up to the upside here and you try to short it again with full time frame alignment with the downside. But shorting down here at lows, tricky stuff, right? Tricky stuff, because you just have to hope that there more sellers show up here. But hope is never a good strategy. So, nothing too apparent going on there for ETH. Would not be surprised to see lower prices. Just not an easy trade to take at this point. ETH. All right, so 2 final charts here, and we'll wrap things up. First one is the total market cap for cryptos. We had been at a whopping 2.57 trillion back in the month of May. Now it's Momo down, just like the ETH chart. Momo down here now, and we're still far from taking out the prior quarter's low, but again, we're nearly at the end of the quarter here now, 4 days left. And so let's see next week if we can take out this quarter's low to create the quarterly reversal. That would be significant. If that happens, definitely need to be getting short even more cryptos. Okay, so I'm actually pretty flat now. Actually very, very flat on my trading account. So just waiting again for the new month, new quarter, more than likely. So total Momo down now. Weekly Momo down. You do hit the bottom end of that Bollinger Band, right? So that's why I think things are extended. Would not be surprised to see things, come further, but then bounce back up again as you're getting extended down here. You get the lower low. It lures in new sellers, because the sellers, people who play breakouts and breakdowns, they're always faced with poor trade location, right? So traditional, technical analysis says, okay, you see that prior low there, you break below that low, you're gonna get short there. Terrible place. It's just a terrible place to, it's just a terrible strategy, because it's momentum based and it really has to work for you. It has to go right away, because if you don't, you're gonna get stopped out. So ideally, you need to wait for someone to get stopped out first and then take the short, because now you're going Momo down. This is the most obvious trade in the world at this point, right? Everyone knows that level. So the problem is that if you break below there and doesn't keep running, you're gonna get stopped out. So better that it comes back up, comes back in here up again, and then you go for the short if price breaks to the downside again, because at least you trap some buyers to the upside who thought that was the reversal to the upside, when in fact they get stopped out and then it breaks lower. That's way better than trying to go straight in the lows. We're always talking about that trade location. Selling that prior low there is poor trade location. You are basically at that point the tip of the spear, and you're more than likely going to get stopped out. So total now, we've been watching it for a long time, right? How long does that 200-day moving average hold? Well, it finally gave it up last Sunday. So Saturday broke below, inside bar down, had a green day on Sunday though, but yeah, they gave it all up here. Bang, broke below the 200-day moving average. And as we know already, that's red quarter, red month is a red week. So yeah, nothing good about that breakdown for cryptos on the total chart. Momo down now. So once again, you get short down here, it's tricky, right? Because you're just basically chasing. And so I'm not saying don't short, because that's the bias, because it's full time from line with the downside. But again, you're going right in the lows. Better to wait and look for a pullback to stop out some longs when you get short. Final chart of the day, of the session. Let's go SHITPERP and look at the perpetual futures contract for the shitcoins. And again, they have been doing the Bollinger Band walk, right? And this is what I've been, I've been warning about this for a while. So this is a scary picture here when you do a Bollinger Band walk to the upside on the monthly chart, because it has to keep going, right? This is a great looking chart until it's not, right? So that's interesting. That gets a bit parabolic, even more parabolic, even more parabolic, and then finally, yeah, rip to the downside. And now you're sitting down in the, you had a minus 30% month there, another minus 35 there, and that's what it looks like when the Bollinger Bands break to the downside after a parabolic move to the upside. So now you have a 2 consecutive lower lows in a row, and on the weekly chart, you know, the prior month's lows got taken out, so it looks a lot like ETH, doesn't it? Double inside bar, and now 3 consecutive weeks to the downside. And the 200-day, it broke on that as well. Just like we talked about last week, question was, how long does that 200-day moving average support the price? They gave it up this past week, right? So they broke below there, and you know, basically it's been selling to the downside. Momo down now, just like the total chart. You should, again, you're going right in the lows here, so tricky spot to get short, to stay short. All right, so hope you enjoyed this week's video. Just to summarize things, so right now, you know, we're entering into the, you know, basically the final trading week of the month and quarter, and we have the U.S. Independence Day holidays right around the corner. So would not expect the markets to be really kind of dull and uneventful here as they've been for most of the month of June. Expect more of that, and that means we more than likely drift higher on the North American indices. And for cryptos, man, it's red city out there. So the bias is to the short side. I'd be taking more shorts to the short side so long as we can stay with full time frame alignment to the downside, but looking ideally for some sort of pullback to the upside before trying to get short again. In order to repair these charts, it's going to take some time. That's what it's going to take, and I think it's what's going to frustrate a lot of buyers here is that it's very, very difficult to repair a chart like this. And the only way you can begin to repair a chart like this is if you can take out this bar's high. That would be the beginning of repairing a chart like this, is by taking out the prior week's high. That would take a lot of work because this is a minus 25% move here. So if you open up here, you have to come all the way back through the range again. And so this, you know, for it to play out will take multiple weeks. That means we're going to have lots of time to get back in the markets. People like to try to catch the bottom. You don't have to. You really don't have to, because if the charts ever fix themselves, rest assured that, you know, if we're going to go back to all-time highs, it's going to take some time, because you're going to have a bar here, and you're going to wait for that prior high to get taken out. And we're going to have lots of time to watch for that reversal play out, because you need to have it play out first on the daily chart on a lower time frame, right? So you have to have a price reversal on the daily that has to break above a prior day's high, and you got to start getting above these levels here: the quarterly open, the monthly open, the weekly open, the monthly open, and the quarterly open. Again, these all reset this coming week, which is why I'm saying not a bad idea to sit in your hands and wait for those time frames to realign themselves. All right, that's a wrap. Once again, hope you enjoyed it. If you have any questions or can think of any ways we can improve these videos, drop me a line on YouTube in the comment section, or head over to the blog at thetradingedge.org and you can post a comment there. If you like the videos, click the subscribe button. Subscribe, this will let you know when the video drops. And as always, have yourself a good trading week. Stay strong, and we'll talk to you again next weekend. All the best.